Traders, today we're going to be talking about US oil. Now, US oil has been in a downtrend since 2022 and is still in that downtrend right now at the making of this video. The point of this video is we're going to be looking for opportunities that we can jump in on so that we can basically profit off market doing what market is going to do. Now, with that said, make sure you watch this video to the end because this video is going to be time sensitive. We are also going to be looking at all the data that will be coming out today in regards to the oil market and how we can have our best foot forward in regards to that. So like I said, make sure you stick around. There's going to be a lot of useful information in this video. So with that said, let's get straight into it. Welcome back, traders. Like I said earlier, we're going to be talking about US oil or WTI oil. Now, as it stands, oil right now has been in a downtrend, okay? So it's been a fantastic opportunity for sellers of oil, okay? Because oil is just moving in a downward direction. And today we have a bunch of data coming out today that may end that situation or may reinforce that situation. Bottom line is we're going to be looking for the best opportunities we can get our hands on in a market, and the first thing that we're going to do is we're going to bring on the tools that we're going to be using to assist us with this process. So the first tool that I'll be using would be the periodic volume profile. I may or may not come on with the anchored volume profile. I'll then also be using trend lines to assist with the process, and finally, if needs be, I will then be bringing on the trend-based Fibonacci levels to assist us for the best possible levels we can get in regards to making moves in the market. So now that we've gotten that out of the way, let's begin the process. So the first thing that I would like to point out to you guys right now is we have a market moving in the downward direction, and this is taken off the day, and this is a super long trend line going back as far as 2022. Now, for the most part, most of you guys that will be considering trading oil, depending on how you do your analysis, you may want to shorten your trend line a little bit because the data in this area in terms of what's going on in regards to trend is still relatively good. You can still use it. So what we're going to do is we're going to add another trend line in this area, and we're just going to make this one purple. So we've got two trend lines. We've got one that we could work off now, and then we have the super strong one, which may or may not come in handy at some point. So now that we've gotten that all laid out for us, the first thing that we're going to do is we're going to bring on our volume profile, and this is the periodic volume profile set to the month, right? And as you can see, based on what is currently going on this month right now, is that we have a bunch of low volume nodes sitting in this area right here. So I'm going to highlight that out for you. So we have a low volume node in this area right here, and we have another low volume node in this area right here, and then we have another one up here. Okay, so these are the low volume nodes that we have at the moment. Price is currently sitting in the value area high of the volume profile. That is this area right here, and in the direction to head towards the point of control, which is this level right here. So the price point for point of control is currently sitting at $61.56. So this is where point of control is right now, and price is currently sitting at the making of this video. It is sitting at $60.47. Now price may get to this level right here simply because there is a bunch of data coming out today. Now I'm going to go over the details in regards to the data very soon, but the first thing that I would like to do right now is go over the analysis as to what we can see in the chart, and then once we've covered that, we can look at the data coming out, and then maybe hopefully that will reinforce everything I've just said, so we know when the moment comes, we know what to do. And by the way, I'm not a financial advisor giving you financial advice. Everything you do is on you. It's super important that you know that. All I'm basically doing is coming up with a different concept, a different idea that you may want to entertain. That's all I'm doing. So now that we've gotten that out of the way, right? Now that we've gotten that out of the way, we want to see if this trend line is going to be broken today. It may or it may not. It just depends, right? The next thing that we are going to do right now is we're going to add on the anchored volume profile. Okay, let's add on the anchored volume profile. Let's do it from about here and let's see what it tells us. Okay, so anchored volume profile basically is in support. note of the trend line being broken, right? So anchored volume profile is basically saying, and this covers a larger area than the periodic volume profile. Periodic volume profile is only covering the month. This is giving us a large body of data in one snapshot. So what the anchored volume profile is saying is that longs should be considered at the value area low of the volume profile, which is currently sitting at $67.25. So a close above that is a good indicator to say, hey, you know what, let's ride it to the upside. But however, there is one rule that we always must maintain, and there's one rule that we always must follow. The trend is our friend. So as we can see, market is going down. It makes no sense right now to consider looking for longs in the oil market when oil is going down. Yes, the volume profile has given an indication to say, if this happens, you can do this. But up until then, we're off the mindset that oil is going to be going down and we need to be selling oil. That's the mindset that we're going off of. So what I'm now going to do is I'm now going to apply the trend-based fib level, and that's going to give us an idea as to what we need to be doing. So let's just drop that right here. And where the low volume node area is suggesting that if we get a close above, we should consider taking longs, right? At the same time, according to the fib level, if we get a close around that level, okay, we may want to start thinking about putting in pending orders at around $63.32, right? In line with a possible sell-off. We could aim to do the sell at the 38 level of the fib, which is $67.79. But I think it would be more smarter and more logical to look at the 63 supposing to the 67. But I will leave that to you, right? I will leave that to you to make that decision, because like I say, I'm not a financial advisor. All I'm basically doing is just throwing my ideas out as to how I would do things in the market, and I will leave that to you to decide if that makes sense or if it doesn't make sense. That's all I can do in this space, right? I'm not telling you what to do. So with that said, we've got the recommendations of the fib. We can see clearly what is going on in market right now. This is the trend that could break, and once this trend breaks, it could signal taking longs, especially if it's above the low volume node area of the anchored volume profile. But just going off common sense, which is that market is in a downtrend, I believe it makes more sense to follow the direction of the fib supposing to going off the low volume node. Why? Because these things don't actually tell us what to do, they just guide us in what is actually happening. And like I say, we have a clear bona fide downtrend, so that's what I think we should be following. Like I said earlier, I will leave that all to you. So now with that said and done, let's go over and take a look to see the data that is coming out today at 2:30 p.m. GMT, because I'm in London. Obviously the time is going to be different depending on what part of the world you are in. So the first is we have US crude inventories, right? Now if this number is actual or less than what's forecast, is good for oil. The next is we have US distillate inventories. If that one comes in less than what is forecasted, right, then it is good for oil, right? Meaning oil is going to be going up. Then we have gasoline inventories or US gasoline inventories. If that comes in less than what has been forecasted, that is good for oil. Then finally, we have the US federal rates. So whether they cut interest rates, keep it the same, or increase interest rates, if it is less than what has been forecast, it is going to be good for oil. And then after that, we have the FOMC meeting. The US Fed rate, that's coming out at 6 p.m. GMT. So that's the data that we got coming out right now in regards to oil, what could happen. And we've also got all of the analysis based on what could actually happen in the oil space. So when the time comes, you now have to decide if you're going to be actively participating in the market or if you're going to wait for the data to be released before you do anything. These are all decisions you will have to make, okay? But I'm just here to put it out in front of you. And the main theme that we're going for today, based on the data, is we want everything to be less than what is forecasted. That's what we're going off in regards to the data coming out today. So with that said, if you found the content useful, make sure you check out the next video, which is going to be on how I use a volume profile. I have a list of videos on there, so make sure you go check them out and drop your feedback, your thoughts in there as well. And I will see you all on the next one.